we're already seeing a lot of Fortune 500 companies come up with like their stablecoin initiatives, banks, JP Morgan, Goldman, all these guys building their own like platforms, right? So I think you'll see a lot of experimentation. I think you'll see a lot of fragmented liquidity, because at the end of the day, if you can control the supply, you control the yield. Why would you give the yield to Tether when you can control the entire flow?
Absolutely.
Yeah.
Tying it back to zrTalk for a second, like that's literally our thesis in a lot of ways, right? It's like specifically on something like Bitcoin. Why am I going to give all of the economics to Coinbase, right? And let them have CBBTC underlie everything if I could have my own wrap Bitcoin implementation that's tied to a standard that I don't have to worry about all the complexity, but I can still own the economics. Think about all these Bitcoin ETFs, right? Who's the first Bitcoin ETF that says it turns out that the easiest, most seamless way to manage our day-to-day liquidity in terms of redemptions and net inflows is to use something like ZenBTC on Solana? Right? Transactions are way faster, transactions are way cheaper. You have the ability to implement smart contracts and all sorts of really cool stuff to improve security, improve workflows, whatever it may be. And then them owning the economics through their own wrap Bitcoin is like a really cool implementation. I see this news around Jito as like totally validating a lot of our key theses,
right? Where
the future of kind of TradFi and DeFi coming together needs this sort of custody standard that can be cross-used for everything.
Hey everyone, welcome to zrTalks episode 4. I'm Adi Dave, co-founder of zrTalk and ZenBTC. I'm joined with my co-founder, Jack Crevitt, and also a very special guest, Kushagra Ariel. How are you doing, man?
Doing good. Summer's great. ETH is up, so can't complain.
Exactly.
Well, really glad you're here. Just want to start really, what on your background and your backstory. How did you get into crypto, and what was really the first conversation you had that made you want to jump into this industry head first?
For sure. So actually, I remember on my 18th birthday, I was, because I used to watch a lot of personal finance videos growing up, and I was like on the FIRE movement, if you guys know that. And then I was like, what's like the next asymmetric bet outside of like stocks I could take? And then on my 18th birthday, I opened a Coinbase account and I put in like $100 into like BTC and ETH. And I was like, okay, this is going to be huge for me. But then fast forward a little bit more into the pandemic. I was really in the weeds of like crypto when like the Fed started printing a lot of money, like March 2020. And that's when I dug into like the Bitcoin rabbit hole really and started learning a lot more about it. And I was like, damn, this is like actually going to be the future of finance, of how we kind of settle transactions and do things. And that's when I was like going into college, I was like, this is where I kind of want to spend a lot of time like working on.
And now fast forward to what you're doing now. Tell us a little bit more about that.
Yeah, so right now I work for Maelstrom, which is the family office of Arthur Hayes. He was one of the co-founders of BitMEX and started a family office in late 2022. So it's an early stage crypto investment fund. We also do like liquid investing as well. So yeah, been a fun ride. Have done 6 investments so far.
Nice.
And yeah, actively looking to deploy. Let me know if anyone is out there looking for a fresh capital. Always looking to talk to new projects as well. So
nice. I'm sure your DMs are gonna be full after that.
Hey man, I'll take it.
Yeah.
What was actually the first DeFi protocol you used? I always like asking that question.
Yeah, that's a good question. I think I used Yearn Finance.
Oh, no way.
Yeah, so
wow.
This was like maybe August of 2020 or something like that. I think it was just like the whole idea of like yield was just coming out and you could just like active management.
Yeah.
And I remember like automated DeFi strategies being like pretty huge. This was like before the Uniswap airdrop. I didn't even know what Uniswap was at this point.
Wow, that's crazy.
Yeah.
Yeah, I remember the whole like automated yield strategy stuff, and that's actually still very prevalent now. I feel like, especially as new people come into like DeFi, they want to think of the best way to achieve like an aggregated yield. Yeah. And I feel like there's an opportunity for a protocol to really build some sort of like yield optimization tool across all chains, which is definitely really interesting. But I think one of the most interesting things that have been happening over the past like 4 months alone is the DATs, the digital asset treasuries. You have Bitcoin DATs, Ethereum DATs, Solana DATs, Hyperliquid DATs, Dogecoin DATs. What's going on from your perspective, and how are you guys viewing that from not only an investment perspective, but also from a macro perspective as well?
Yeah, I think like personally, I've been looking at, as you guys probably are too, like it's it's insane. There's like one every day or two,
Yeah.
three. Like there's like so many of them, and yeah, I think most of them are not differentiated enough to actually invest, because you go on these calls and you understand more about the strategy. Basically, everyone is running the same strategy. Everybody's gonna do staking. Everybody's gonna try to earn extra yield and make the asset more productive. Maybe earn like 2 bips of whatever on the assets under management, and ultimately that is not highly differentiated enough. I think where there was a lot of like actual alpha was when you had like Joe Lubin and like a lot of these other folks that actually have like real ability to kind of sell this thing to mass market retail institutional investors. And I think the ability to raise capital is also huge. Like you need somebody that can actually go out there and be like, hey, like we can actually do a Michael Saylor strategy,
Right.
like MicroStrategy, right? So I think it really depends, and I think we'll see. I think this is a very interesting trade as well, because this kind of brings me back to like the GBTC ARB trade that was going on for a long time. I think we might see a lot of these players like trade below NAV, and that's when it becomes really interesting, because what happens if the balance sheet has more assets than the market cap of the company, right? So yeah, I think like there's some interesting considerations in like the actual like trading side, but I think a lot of these DAOs themselves are not like super interesting, like in terms of like actually having like a venture backable or like something like differentiated enough to actually invest.
Right.
Yeah.
Yeah. I mean, I think about it as well from the perspective of it just shows where we are as an industry, especially in terms of like the TradFi like zeitgeist right now. The fact that this has so much demand across a wide variety of assets, right? It's one thing when it's just Bitcoin, but now having all of these, kind of more established altcoins coming in and getting these sort of strategies done to it, it's like, wow, the old world is really looking at this in a totally different way. I think I was watching last night like the recap of like the All In podcast, like they did like their live summit, and Scott Besson was talking about stable coins, and I'm like, this is unimaginable, like and it's really just being talked about in a totally different way, just very calm, not like futuristic, like, hey, right now we're doing this to move stablecoins forward. And that, I mean, how different is that?
It's huge. It's huge. And we'll get to stablecoins, but on the DApp piece, I've been thinking a little bit more on how important the Bitcoin ETF was in January of 24, right? For two reasons. One, obviously, now, if you want to acquire Bitcoin as an investor or a traditional institution, you don't have to download a Coinbase. You don't have to go through any sort of OTC. You can just do it directly via your brokerage account. And then two, for the individual investor, I can put IBIT in my Roth IRA now. How incredible is that from a capital gains to taxing perspective? I've always been worried, like, oh, I'm going to sell my Bitcoin. I've been holding it for so many years, and now I'm going to get this massive tax bill. But all of a sudden, this ETF allows me to put it into my Roth IRA. That's just an incredible tool. And I think I encourage everybody. Obviously, this is not financial advice whatsoever, but I encourage everyone who's holding Bitcoin to have at least a decent portion of IBIT or whatever ETF that you have and hold in your Roth IRA. But also, one thing that I've been just thinking about as well is like, how does like a DAT differentiate from the ETF really? And I think there are different things where you could talk about management team, you could talk about like MNAV premiums, you could talk about market irrationality generally of just like people buying it because markets are irrational, it's going to go up. But curious to hear your thoughts on really what the differences are.
Yeah, I think like it's like from what I understand, it's also like a vehicle for speculation. Yeah. Like ETFs, you can't really speculate on that much, right? It's just you're buying the underlying. But when you buy these vehicles, there is a perception that it will trade above the NAV, right? And also, I think an interesting point is like a lot of the FTX sales that we've kind of seen like happen like 2 years ago. Basically, private investors are putting the locked tokens into these vehicles for faster liquidity, right? But you don't see that in the headlines. You see they're raising $1 billion, $2 billion, whatever. But ultimately, I also see it as a vehicle for private investors that have locked tokens to get liquidity. And I think that is going to have some ripple effects into the selling pressure because you're effectively getting a discount, and then you're gonna trade at a premium, and then you could sell that, but the company, like the actual treasury company, will face probably worse drawdowns because of that.
Right.
Yeah. So I think that's an interesting dynamic where like funds are arbing the timing of liquidity.
Yeah. No, that's super interesting.
Yeah, I was looking at this the other day as well. I mean, this whole idea of how locked tokens play more broadly into this ecosystem. And, you know, especially this idea of, okay, if you're a hedge fund or you're some sort of person who takes locked tokens and gives cash for that frequently, right? You may take a position in a locked token and then turn around and the token goes up significantly and maybe you hedge through the perps, right? Because you can't necessarily sell your tokens. But this is another way of potentially getting some sort of liquidity. But I think that overall, like, it highlights just that we're not quite in a place where the market is fully mature in terms of structure. And it would be better to get to a world where the way teams are exiting is clearer and cleaner and more aligned than kind of having all sorts of different stakeholders exiting at different times and, you know, having kind of often misaligned incentives, misaligned prices that they're getting in on. So
definitely. I really do think there's an opportunity for some of these ETH DATs, SOL DATs, maybe even the hyper DATs, the hype DAT, to actually turn into a potential operating business. You look at Ethereum right now, over the course of the last, I would say 5 years, Ethereum has really matured as a layer 1 blockchain. And you have had these companies like Flashbots, for example, and Block Native and Blockshroud that have really optimized transaction ordering on Ethereum. And if a DAT is holding a large amount of ETH, I think there's a huge opportunity for them to figure out ways to increase their yield via working with some of these MEV companies or block ordering companies. That to me seems like a no-brainer. And the ones that actually will do that, in my view, will win. The ones that kind of stall and don't necessarily know how to bridge the gap between, getting inflow of a bunch of ETH and actually putting that to work will fail completely. But there is a huge opportunity for a lot of projects that have huge technical acumen in terms of Ethereum block ordering and even Solana block ordering, like Gino, for example, to make a huge impact and turn the DAT into an actual operating business. It's just, at the end of the day, it's really the management team's ability to execute on that, because I see a clear opportunity for that. I'm not sure if you see the same.
Yeah, I agree. I think the main differentiator is a management team. And if they have the connections, the know-how, and the basically the skills to implement all of these, basically become even more crypto native and embedded in the ecosystem to generate extra yield, I think that could be really interesting. Also, another thing is imagine you could own parts of the companies themselves.
Right.
You basically become a holdco for these assets.
Right.
I think that's also pretty interesting.
I mean, who is? I think it's a really interesting point. Who's the first DAT to go out and raise a bunch of capital and use some of that to actually acquire a business?
Yeah.
Right. And say, okay, well, we need to, whether it's block ordering, whether it's, any other part of the infra stack,
right.
We're going to get deeper and deeper in the infra. And I would be willing to bet that, on an MNAV basis, however you want to look at it, that the market would react very positively to that sort of development and say, wow, this company deserves even a larger premium because, now they're going to be able to do all this stuff on the operating side and use the ETH or the SOL or whatever it is more effectively.
Definitely.
But that's also kind of, it's stepping a little bit away from mandate if you think about it from a pure just buying this this token perspective. So we'll see who takes that lead.
You have to. I mean, if you're a DAT, you got to differentiate yourself.
Yeah.
The mandate is the mandate, but if you want to win, you got to change it.
Yeah.
And there's a clear opportunity for the ones that do. Another interesting point I would say is this convergence of TradFi and DeFi in terms of a knowledge gap. I think the knowledge gap is tightening in real time. I mean, what was the news today, Jack?
Yeah, we just saw Jito Sol is going to be entering. I don't remember which one. I think Rex Osprey or something.
Yeah, Osprey.
Osprey ETF as the giving staking services. This is the first time, to my knowledge, that an LST is being used in an exchange traded vehicle, right?
Yeah.
This is pretty unbelievable. We have DeFi directly embedded in the equity market, for the first
insane.
time
That
ever.
is sick.
I mean,
And I've always said crypto blockchain is like really the backbone of the future of financial services, equity, etc., investment vehicles, etc., right? So this is like a pure play example and use case of that, which is just really impressive to see. I think one of the qualms that some investors have is that like the traditional world, in terms of like TradFi institutions, are not really ready to understand how DeFi works. But I constantly think to myself, like, do they even need to? Like, do they really like care if they're getting a certain extra yield or alpha based on it? Like, yeah, obviously in the next 10 years, like they'll probably be really knowledgeable in decentralized finance. But in the short term, you know, I think just a little bit of like a macro differentiation for a DAT could really yield extra results and outsized returns for investors, even if it was like super complicated.
yeah, I think that this also goes back to, you know, DeFi being useful. And I think that the more that we have situations where DeFi is useful, the more people are going to be willing to kind of step out and be like, okay, I get why this solves a need for me. Now I want to learn more about it.
Yeah.
And I think that looking at the, you know, this Jito Sol situation, like I don't obviously know the specifics, but if you have all the Sol, if you want to do a stake Sol ETF, you need to have Sol that is staked. You know, which if you just do it the traditional way, locks it up for a period of time. And then you also need constant 24/7 liquidity. So you, by definition, need to keep, you know, a portion of it in just Sol cash, pretty much just Sol, so you can kind of deal with those redemptions as they come in. But now, and there still will probably need to be a percentage in just Sol, right, to manage these things. But now you could have maybe less in just Sol not yielding you anything and use an LST as kind of your cash, right? Yeah. And then give your end client a better product that has higher yield. Like that's a real, true, tangible DeFi use case, being able to do something that TradFi wouldn't have been able to do without it, which is really, really cool to see.
Yeah, and to your point, I think like Osprey did it, right? So you probably have a lot of the other players kind of following through, and they were like, okay, if they're doing it, why can't we do it for our clients?
Exactly.
And now there's a ripple effect. It just takes one player to actually implement these things, and then once you have that, everybody's kind of comfortable with the risk now, right? So it now becomes like a flywheel, and that's probably, you know, not financial advice obviously, but might be good for Jito as like a token or like the institutional kind of Solana infrastructure play.
100%.
Yeah, I mean we're big fans of that team and have talked about them a lot in the podcast. But to your point, it also works in the other way, right? If one of these DATs start failing and they overlever, that could lead to another domino effect of selling pressure that the industry has never seen before. And I think that it could be a potential catalyst for the bear market. I don't know when, maybe it's not weeks, maybe it's not years, it's probably months, I don't know. But it could be an issue, especially as these DATs try every single possible way to differentiate, especially if one of them comes to the forefront and starts innovating. Do you see the same thing? I'm sure you.
Yeah, I'd be curious to get your guys' thoughts too, but I think like, like the consensus, what I'm hearing right now is like 6 months. Give it like 6 months, and then we'll probably see the ripple effects of it coming down. Because how long can you just keep levering up the companies, keep getting more convertible notes, etc., just piling on the dry powder to just keep it going? We'll see how long it goes, but
as long as prices stay high, you can keep doing that. Prices fall. If Ethereum drops back down to 2K, it's going to be an issue for a lot of these ETH DATs. Bitcoin drops back to like 60 or 70. Huge issue.
That would be a bear market.
Massive ripple.
That would be, I'd call that a bear market. I think I'll take the over on the 6 months. I think that the change in institutional, like kind of the TradFi, older money, which is where all the money really is, right? Mindset. They're seeing this now. There are so many people who are looking at it and they're like, all right, I'm finally ready to buy some Bitcoin now. You know, like we're just so close to it. And this is something that we always talk about, that we're so close to it that we see it in real time, and we assume that like news that's old for us is old for everyone else, but it's really not the case, right? And there's a lot of the world who's just waking up to the fact that like, oh, Ethereum exists, and like there are these things called stablecoins on Ethereum, and like that matters for some reason that I don't really understand, right?
The stablecoin super cycle.
Yeah, exactly.
I mean, it's so true. The stable coins were crypto's like chat GPT moment.
Yeah.
You know, like in terms of an actual use case that wasn't focused on like token emissions and random airdrops and liquidity going from one hand to another. It was an actual tangible use case that people are using daily, and that. You know, right now we're sitting at 260 billion stablecoin supply. Curious to hear your thoughts on where that goes in the next 5 years.
Yeah, I think like probably I mean, we're already seeing a lot of Fortune 500 companies come up with like their stablecoin initiatives, banks, JP Morgan, Goldman, all these guys building their own like platforms, right? So I think you'll see a lot of experimentation. I think you'll see a lot of fragmented liquidity across all of these players building their own kind of stablecoin platforms. Whether or not they build their own stablecoin issuance platform or they use something else, I think that's like I don't know the answer to that, but I think either way they'll probably launch their own coin, because at the end of the day, if you can control the supply, you control the yield, right? So you can just like Tether, you could just why would you give the yield to Tether when you can control the entire flow?
Absolutely.
Yeah.
I mean, tying it back to zrTalk for a second, like that's literally our thesis in a lot of ways, right? It's like, well, this is the idea of a DCT, right? A decentralized custody token. Why specifically on something like Bitcoin, why am I going to give all of the economics to Coinbase, right? And let them have CBBTC underlie everything if I could have my own wrap Bitcoin implementation that's, tied to a standard that I don't have to worry about all the complexity, but I can still own the economics. Right. And think about all these Bitcoin ETFs, right? Who's the first Bitcoin ETF that says, actually, it turns out that the easiest, most seamless way to manage our day-to-day liquidity in terms of redemptions and net inflows is to use something like ZenBTC on Solana, right? Mm-hmm. Transactions are way faster. Transactions are way cheaper. You have the ability to implement smart contracts and all sorts of really cool stuff to improve security, improve workflows, whatever it may be, and then them owning the economics through their own wrap Bitcoin is like a really cool implementation. I see this news around Jito as like totally validating a lot of our key theses around where the future of kind of TradFi and DeFi coming together, needs this sort of custody standard that can be cross-used for everything.
Yeah, absolutely. I completely agree. Just touching on one point that you said on stablecoins, it's interesting. I was looking at some data on Ethereum and comparing it to Solana from a DeFi perspective. So just some stats here. It's, Jito has around 3 billion of TVL. Lido has 33 billion of TVL. Camino has around 2.5 billion of TVL. Aave has upwards of 25 billion of TVL. That's the two largest, I would say, use cases of DeFi, liquid staking and lending, the two things that I think primarily have the largest moats and the most defined moats in decentralized finance. And as stablecoins proliferate, where do you see them really settling on? And how do you view the differences between really the two settlement juggernauts in the space, Ethereum and Solana? Yeah,
I think to your point, actually one of my friends was asking me, he's like, hey, so this stablecoin thing, I think it's going to be huge. What do I buy? Do I buy Circle? Do I buy Ethereum? Do I buy Solana, right? And I think right now what you're seeing is a lot of institutions are using actually Ethereum to sandbox test. I think maybe Avalanche a little bit. Solana's of course in the mix too. I think Solana's a little bit behind on the institutional side. I think they're trying to catch up to that quite a bit. I've seen a lot of their initiatives pop up. But to be frank, I think for now, Ethereum is definitely the proxy to where banks and institutions feel most comfortable launching their sandbox or pilots. Let's be real here. No one's using Tron to launch their stablecoin.
Volumes on that. I think, I don't know. I'm not going to say anything on the pod live, but we'll see.
We'll see.
But no, I think you're right. And again, it goes back to this whole idea that you brought up earlier of when now someone sees the use of an LST in an ETF, and now I agree, you'll see multiple others follow suit quickly. Yeah. It's the same thing where Ethereum has a real big advantage, where if you're a bank or you're an executive of a payments company and you're like, okay, we want to have our own on-chain presence, like what should we do? It's like, okay, well, you could venture off into the wilderness into like all of these 10, 15 options that you don't really understand, or you can build an ETH-L2 and here's 20 other, similar companies to you that have all built ETH-L2s. So, clearly those guys think it makes sense. So probably makes sense for us too. It's a way to venture into something that feels extremely deep out on the risk curve for these guys, but do it in a way that is still kind of inbounds, and there's even if it goes wrong, you say, well, everyone was doing this. We all thought it made sense.
Yeah, no, definitely. And at zrTalk, we specifically chose Solana because we inherently thought it was an asymmetric opportunity to bring institutional Bitcoin to Solana in a secure way. And we've been working closely with a lot of the DeFi protocols in Solana. And I say this, probably every single call, that it was like night and day difference in terms of working with actual applications on Solana versus Ethereum. Huge difference. And I think Ethereum generally has a lot of management issues from not only the Ethereum Foundation, but also from the application perspective too. Does Lido have a management team? I mean, how many times did we try to get in contact with them? Like, we were able to get contact with Jito, Camino, Drift, literally in one message. And I've been in this industry for 6 years. Like, I feel like, if I send out a message, maybe there will be a reply and I'll get, contacted with like either Aave or Curve or someone in the Ethereum ecosystem. It took a while, actually. It took some time. So that management kind of issue in terms of Ethereum being like decentralized, Ethereum Foundation focused on like theses and papers and academia versus Solana having a team of 70 at the foundation, night and day working on making sure that they can increase bandwidth and reduce latency, break things and move fast and really mimic the New York Stock Exchange is something that personally I wanted to align, zrTalk and ZenBTC with, because that's something in the long run, who's going to win out, right? I mean, liquidity begets liquidity in DeFi, and the stats, the data is the data. You can't really change that. But as an asset issuer and a protocol, there is a very interesting opportunity if you want to take a little bit of risk to deploy on Solana, because not only will the team help you, but also there's a huge advantage from if you are able to build liquidity and bring outside liquidity into Solana, you will have a huge eye on you just from the perspective that there's not many other protocols compared to Ethereum working in that settlement layer. So that was the main reason. I do agree with you from the perspective of banks and enterprises launching a stablecoin or launching some sort of pilot or sandbox that probably will work with Ethereum, because Ethereum just has the first mover advantage when it comes to smart contracts. But over time, it's our view that Solana will actually outpace Ethereum in terms of DeFi and trading. And you are already seeing that with DEXs, right? Solana is trying to build the equivalent in New York Stock Exchange. But what has happened over the past 6 months is that Radium at times has outpaced Uniswap in terms of DEX volume. It is actually, I was looking at it yesterday, the 30-day DEX volume is pretty much the same for Uniswap and Radium. And then you also have two other DEXs that are pretty much competing for that volume on Solana that are outpacing every other DEX known in Ethereum by a large margin. That's Orca and Meteora. And they're coming up and outpacing, almost like outpacing Uniswap's DEX volumes, which is pretty crazy. So from a trading experience and trading, from a trading just experience from a user perspective is actually like much better in Solana. And that's just true. And I think the meme coin media has really laid out the rails for that to prove the use case for Solana to become like some sort of trading hub in the future.
I think that, Ethereum, the Ethereum L1, I think it's very difficult to see a world. I think it happened, but it doesn't seem likely to me a world where there's any platform that competes with that in terms of pure decentralization, a level playing field where it's just a decentralized world that is as robust as possible. And Ethereum kind of will have that spot. It causes them to move slowly. We all know this, right? We've lived it. We know this, from an investment perspective, from an operator perspective. but that is intrinsically valuable. And I think that, going back to your point though, like for us at ZenRock, it was like we wanted to be part of an ecosystem that was moving faster and was willing to kind of make partnerships and strike deals and kind of get everyone aligned on a certain thesis. And for that reason, like, Solana made a lot of sense. But I think that sometimes the ETH hate is overdone.
Yeah, agreed. I think you guys made a lot of really great points. I think Solana is kind of like the SF startup culture, move fast, break things.
Yeah.
I think if I was to go to market into any like ecosystem right now, it'd probably be Solana for sure. Maybe Hyperliquid, but that's like a different discussion. But I think like in terms of like actually being able to launch a product with like proven tech at this point, I think like it's been around for 4 or 5 years, and we've seen the adoption go pretty. I mean, like even in terms of users, like activity and everything. Solana just has a leg up on Ethereum in terms of people actually want to use the apps on it, like in terms of like consumer and also DeFi. But yeah, I think that the idea that like Ethereum is slower is I think definitely true. Like the Ethereum Foundation is trying to kind of change the image of that recently. I'm sure you guys have seen like the efforts to kind of build like this side arms and venture arm and etc. to kind of build up like the ecosystem in a more focused way. But I think Solana definitely has a leg up in that, and I think the meme coin mania was just a catalyst into it, but it just goes to show you that Solana is definitely ahead a lot of the L1s that are outside of the top 5. I would say like it's very hard for me to build an ecosystem or project. Like not gonna name any L1s, but you know what I'm talking about. Like there's a couple that I would just be like, okay, like probably not the best idea to build something there.
Right.
Yeah.
No, I completely agree. I guess we're venturing a little bit more on chain, but maybe if we take a step back, DATs weren't the only thing that has happened over the past 6 months. You've had a massive inflow of M&A activity and also IPO activity. Obviously, Circle has catalyzed a lot of the IPO mania. I think it was really surprising to everybody in the industry, the amount of demand from a TradFi perspective for stablecoins. It was honestly unprecedented. I think Circle just ripped up, trading at a 50 billion market cap now. That's incredible. Who would have thought, right? This was trading at secondaries at like 3 or maybe even 5, right? Just like 6 months ago.
Less.
Even 4 months ago. How crazy is that, right? So that unprecedented demand could really coil up and rip up for prices generally. And I'm curious to hear your thoughts on how you think the M&A landscape is going to evolve over the next kind of 6, 12, 18 months as companies either become a little bit more distressed from a cash runway perspective, or on the offhand also are starting to make a lot of revenue, but aren't really a IPO kind of story and don't really have all of those like internal, I guess, rails in place right now.
Yeah, I think like you see a lot of this with Coinbase. They're just out there just acquiring companies, every day.
Yeah.
I see like a new announcement every couple of weeks. They're kind of venturing into like more of the on-chain stuff now. I think given the fact that their stock has just gone up like parabolic all-time highs, like they can only grow so much with their existing business. They kind of have to expand from that pie into, let's say, on-chain or trading or consumer apps, etc.
Right.
So I think like the bigger corporates within crypto will start, picking up some of these like smaller players and basically building and consolidating like into like, I'm sure you guys saw like the base app that they're launching.
Yeah, that's really cool. I'm on that wait list. I hope I get in.
Yeah, let's see. Because I'm actually a big user of the Coinbase wallet.
Nice.
And I think it's like, I'm hopeful for the base app. I think the Coinbase wallet is not up to par with Ravi and Phantom and a lot of these other wallets.
It's not. I used Uniswap wallet on my mobile, and that's really good.
Yeah.
I don't use MetaMask anymore at all.
Yeah, MetaMask. I say
RIP MetaMask.
Who uses MetaMask?
I don't know, man.
Yeah.
I mean, what a mess up. Anyways.
Yeah.
But I think that's true. I mean, Coinbase left and right, but also you're seeing like other businesses getting acquired by like MoonPay, for example, has done 3 acquisitions to date. who else? I mean, there's been many other like equity for equity swaps type of transactions that have done. Not too many cash transactions, I would say, but I think you're going to start to see more and more cash transactions come out, especially as smaller businesses start to get acquired. But maybe there's a mix of it too, you know?
Right. Like, I think the path to liquidity for crypto investors has always been like tokens.
Yeah.
But maybe now the landscape is shifting a little bit where equity becomes a bit more interesting because I think crypto has obviously like a lot of network effects, and I think it becomes really interesting to acquire businesses that have that. So I think, to your point, like maybe the contrarian bet, or actually maybe not so contrarian now. I think you guys have been doing it for basically the entire life cycle of the fund, but I think it's becoming more mainstream to invest in equity businesses now than in the past.
Right.
Yeah.
Yeah, and I think it's really interesting. We've seen for many years, the fact that you were a crypto business would make you trade at a discount. People are like, okay, the revenue's here. Yes, it's growing at this rate, but it's a crypto business. Therefore, like we have to give it a 20% like haircut on whatever valuation you want to give it. And now there's no better embodiment of that flipping than DATs. Yeah. Right? Literally buying tokens at a premium.
Yeah.
Right?
Yeah.
Just showing like, wow, now the fact that you're associated with crypto is a premium, right? Like even like something like Circle, like trading at a valuation that makes sense, you know, when you think about it only from the perspective of how big this is going to get. Right? And that's a totally a huge flip, which is going to make the ability for these companies to use their equity to acquire other businesses so much easier than it has been over the past three so years.
Yeah. I think that's 100% right. Like crypto equity definitely has a premium now. And for the investor, you actually do get like protection, which I think is very important. Historically, you know, I come from, you know, an early stage VC before I joined 10T, actually now 50T, by the way.
50T?
That's where the total market cap of crypto equities and tokens are going in 10 years, which goes to your point of how big this could really get. I think we trademark 100T actually recently.
1Q.
But just, you know, just 2.5 years ago, really, people were calling me crazy, actually crazy to go to an equity shop. And I was coming from a pure token shop. And I was like, look, if the industry has to really mature, equity is going to be a thing. It's not going to be just tokens. And, you know, I remember at conferences, people are like, you guys only invest in equity? Like, how? You know? And they just couldn't understand in their head that equity is actually going to have a premium compared to tokens, especially as you had a massive, like, you know, a lot of these tokens just end up giving out so many emissions and incentives in order to get liquidity to their platform, and the investor holding the token just gets dropped down significantly. And you see this day in and day out with so many layer ones, so many different projects, apps, etc. And I'm sure you see that even now. It's probably even more apparent to you as an early stage VC.
Yeah, like token holder rights, basically non-existent.
Non-existent.
For most projects. I think we're seeing a bit of shift into the like better rights for token holders. I think like Blockworks came out with like a couple interesting things about basically a framework around how to actually make sure, like a token transparency framework. I think that's very healthy for the industry, and those are the tokens that you actually want to buy as liquid investors, because ultimately a lot of the supply is controlled a lot of the times by insiders and like the founding team and etc. So it's very hard to get investor protection in those scenarios.
Yeah.
But with equity, you have a very clear structure of where you are in the capital stack and your rights and your, you know, basically what you own in the company. And I think like tokens like Morpho, for example, are really interesting because they just said, okay, like we have this token, but how can we like basically show investors and people that are interested in owning a piece of it that this is the one main thing. And they kind of made an announcement a couple months ago, I think, basically saying that, hey, this is going to be the only thing that's going to represent value in our company. And I think if you can start doing that, it makes me more comfortable to underwrite that as like a liquid token investment rather than just buying the 50th L2, right? So it's just a much better way of becoming a healthier crypto market.
Yeah, that's really interesting. I mean, we don't see deals nearly as early as you do, right? So I'm just curious, like, are the deals coming more as split equity token? Is it leaning more towards all equity, to what extent has the kind of structure changed even in the last couple of months?
I'd say I see a shift where there is a token warrant in a lot of these deals. And there's, there is always like equity plus token warrant, but sometimes what I see is like the token warrant just there in case we try to launch a token, but it's not necessarily what the team is actually planning to do, which is interesting. So it's more like if the investors or the team wants to provide liquidity for investors through a token, it exists, but at the same time, it's not the main kind of driver of value, especially for a lot of like the consumer like focused applications or things that basically like token doesn't really make sense, because at the end of the day, the token is also a product, and that's a whole different beast, right?
Yeah.
So.
No, I mean, for sure. I think it's been an interesting conversation that we've had at zrTalk, thinking about the fact that we launched our own layer 1 ZR chain. So we needed a token. So that kind of became something that was not something that we had to think about as much as maybe these consumer application projects who maybe do or maybe don't need it. But I think that what we've tried to do is just as clearly as we can outline how the tokenomics are going to flow around the ecosystem and how everything works. And this goes back to like the whole idea of just building in public and trying to be as public and transparent as we can, because we very much are aware of the fact that nobody really knows what the standard token equity, all the other pieces, all the other stakeholders breakdown is going to be when we get to like a place in 15 years where there's just a standard, right? And we're kind of creating it in real time, and that's really cool, but also, is going to create pitfalls where, all sorts of companies are going to fall into different pitfalls as they make different decisions. And I think that, what we try to do and what I would encourage all the other projects out there to do is just be as transparent as you can about what you are doing and why. And then even if something doesn't work out, at least you can say, this is what we did and why, and it didn't work out, so now we're going to change it, but this is why we did it,
Right.
And I think the more that the industry moves towards that, it's only going to move towards that as the regulatory environment gets more clear, which it is, day by day getting much more clear. But as the industry moves towards that, I think that people's willingness to invest all across the capital structure from equity to tokens is going to be a lot easier, because you're going to know exactly what you're getting and why.
Yeah, I think my prediction for the next year is also like, I think crypto investor relations, so like token relations, is going to become huge. I think I recently anecdotally just started getting more inbound from token projects being like, hey, like here's what we're up to. Here's kind of our financials. Like, are you guys interested in buying their token? Like, what would you guys want to see for you guys to actually buy the token? So I think it's actually going to become a pretty big part of how crypto investing kind of works, because at the end of the day, like, we all want the industry to grow, right? So, if you just keep extracting value from users or investors, like, it's not going to be like beneficial for anyone. So I think that's going to become like a key part of how projects think about launching their token.
Yeah, and this whole idea of, you'd ask someone on the team, like, how is a certain piece of the protocol performing? It's like, hey man, like go to the DAO, like go talk to the DAO. Like, what is this? Like this doesn't make any sense.
That was like 5 people.
Yeah, the DAO is them. The DAO is this guy with like 5 different pseudonyms. But we're moving away from that. We need to move away from that. I mean, that is just the clearest sign of a nascent industry. And I think it is unbelievably good for the industry to just get away from that as quickly as we can. And I think we're trying to do that, both at zrTalk and then just thinking about investments as well.
How are you guys kind of doing that at zrTalk? Be curious to get your take.
I would say the biggest piece really is the transparency, right? Right now we're building our Explorer. It's on the website now. I'm working on that like every single day, just trying to get more data, more info out there. It's piece by piece because we're also building the main product and kind of furthering that. But like whenever we have time, we're just kind of adding more widgets, more graphs, more tables to the Explorer, just to show, hey, here's how it all works, right?
Our Explorer is a little different than other Explorers that you see. In our Explorer, and we could pop it up on the pod here, you see the total fees that we've accumulated, the total fees that we've burned, which is direct economics to the ROC token. in terms of burn. So you could see that actually put out your own valuation methodology and how you value Rock as a token based on the activity in the network, which I think is important. Frankly, if I wanted to go and see like how many tokens XYZ protocol or project has burned, it would take me some time. I mean, I've done a lot of crypto research in my past, so it would be easy for me. But for someone new who's just like, oh, what is Rock? How can I value it? You could just go to our Explorer and see all of the economics there, which I think is also important. And some companies should try to like promote that within their Explorer instead of having it just be transactions that are happening on the network.
I use the term Explorer like kind of loosely because it's like the Explorer is like the block Explorer, but then also like the chain Explorer, if you will, right? Where it's like showing all of the key pieces aggregated, like, the TVL, like in one simple place. We've all done enough token research to have been to a protocol and you're just banging your head against the wall because you cannot get the data. Right. And you find some like sketchy Dune link, you don't know who made it. You're like, okay, it looks really good, but I don't know if this is real. And then we've also been to a site where it's just beautifully laid out. And it's like, okay, thank you. Like I have all the info here. Like this is exactly what I wanted. They've already front run all the questions that they know that any investor, any potential token holder would have, right? Like everyone's questions are going to be broadly the same. And that's what we're trying to just do is just answer that. I think doing podcast, we've done a lot of written material, try to explain what we're doing as clearly as we can, get on podcast, talk about it in as simple language as we can. All of these things help move the ball forward. Again, not that we have all the answers by any stretch of the imagination, but it's a mindset, I would say, of being open, trying to be clear, not using confusing language, not saying, hey, like go read our GitHub if you want to understand how the protocol works. You know what I mean? Like
it's crazy, man. Like you could just tell when some project is actually trying to build something and then not really trying to build something real. And it's like very clear. Like I think every project should have their own like Dune dashboard or Explorer or whatever to actually allow like people to see what they're up to, because like I'm sometimes I'm going to Dune, I'm like finding a random dashboard like third party made it. I'm like, is this even real? Like should I even trust this? Like and like when the foundation or the team has built their own official dashboard, it's like, okay, I feel more comfortable going into it and be like, okay, like I can trust the metrics.
Definitely. Right.
It's just a different vibe.
I can't tell you the amount of times I've gone to like a Dune dashboard and another data source is telling me one information and the Dune is telling me another information. It's like so bizarre sometimes when looking at a project. And I love DeFi Llama. Honestly, I think that's a great tool. Shout out to them for trying to increase transparency in terms of data for a given project, but it still needs to be fixed. I do think, on the M&A side, like there's an opportunity for consolidation amongst data services because of this single problem. That every single investor, researcher, et cetera, anybody that wants to explore crypto is seeing this issue in real time. And there's a huge opportunity to kind of roll up a lot of these data service and data analytics companies into one entity and have one single source of truth, like a Bloomberg, for example, for crypto. And everyone is saying that, we're the next Bloomberg for crypto, but nobody's actually solving that problem of trust and transparency for data. And blockchains are like the single source of truth for everything. Yet the data in the industry is so hard to find.
Such a paradox.
Maybe there just needs to be like a chain that comes out. They're like the data chain.
The data chain. There's a lot of those too.
There were a lot of those, but you can't like. Not what data, are you gonna have You're gonna have like three different stakeholders, right? You have verifiers, you have data providers, and then you have verifiers on top of the verifiers, just to make sure it's accurate. Impossible.
Exactly.
Impossible to deal with.
But I think that to your point, there's nothing better than the team. By the way, even a lot of the good intention Dune dashboards, someone who's doing a genuine attempt, there's no one who's gonna, at the end of the day, understand the data nearly at the same level as the team who built it, right? Like it's impossible. So I think it is a testament to the team to put that out themselves and not wait for others to do it. But also shout out to Dune for at least giving us data in many spots where no one else is, right?
100%. I think one other thing that I want to talk about quickly is how the entire DeFi landscape has just exploded over the past 3 years. We build like internal maps at 50T of how vast the entire like industry is. and it is incredible to see the rate of change in terms of new sectors coming out within DeFi. And the innovation that's happening broadly within crypto just over the past 2 years alone. So I'm sure you see that a lot in early stage investing and really being at the cutting edge. So we'd love to hear your thoughts on how, from a macro perspective, you see the landscape kind of evolving and what specific sectors are going to see a lot of the value moving forward.
Yeah, I think at a high level, you see a lot of the chains like building or incubating like their own kind of every chain has their like lending protocol, DEX, LST, like perps, right? It's like these like kind of key components every team kind of needs. And you kind of see this fragmentation of basically companies that are essentially doing the same thing but under a different name, maybe a slightly different tech.
Yeah.
And I think to that point, I think there's something to be said about maybe like a white glove service that can kind of just plug into each of these L1s as like a B2B product. Like, hey, we'll build all of these things, basically white glove service, reskin it however you want, and we could launch on any chain. I think that could be kind of an interesting opportunity because you're basically saying you don't have to spend $20 million on grants to random teams and then the team just abandons the project. We'll actually just give it to you and the foundation or whoever can operate those products under the actual L1 or something. I think like that, like more like B2B businesses being built out across chains as we see more chains, as we see more institutions coming on chain is actually like an interesting opportunity that I haven't seen being explored yet. So I'm kind of like, if any team is building in that space, yeah, let me know. But I think like outside of that at a high level, still you see like a lot of the bigger chains controlling most of the TVLs.
Right.
Like, and actually one thing that I have seen was this project called Liminal. I don't know if it's basically like a funding rate ARB. Basically, you can basically do funding rate ARB for any asset pair on Hyperliquid, and you can customize a strategy for each kind of token that you want to do the delta neutral strategy for. And I think like to what I'm trying to say here is basically the idea that like strategies that are only available to institutions are becoming more available to retail traders,
Right.
Becoming more customizable, more transparent. So I think that's like an interesting area for DeFi to kind of grow into, basically unlocking new like yield strategies on chain.
I mean, I think that's an incredible point.
Yeah.
The new age of like traditional asset management will live on chain, and that could be a specific yield strategy embedded in some sort of vault on chain. But I think in terms of general like managing of capital and managing of tangible assets, it will be on chain in the next like 5 to 10 years. I think all like traditional asset managers in the future will have some sort of like DeFi strategy within their entire like wealth management strategy. So I think that's very important. You're starting to see like the first or second innings of that come to fruition right now.
Yeah, and from our perspective at zrTalk as well, like our MPC is so flexible, and we're focused on this idea of decentralized custody tokens right now, and that is our sole focus, and that's our kind of go-to-market guiding light. But in the future, you're going to need all of this ability for different signers and different users to have different authorities over wallets on chain, and especially as money is managed in a less permissioned way. As we continue to move more and more permissionless, not saying it's completely like permissionless, but somewhere in between. I think that for a lot of applications, we're going to end somewhere in between. And the ability to leverage technology like our stack across all of DeFi is going to be really interesting, I think, and kind of change the game from an asset management perspective. Because I think this idea of having anyone be able to manage money for anyone else, even if you barely know each other, is like a really elegant, cool idea, instead of like it needing to go through certain banks effectively, right? And only institutions that have built up massive levels of brand recognition and therefore like command large percentages of the economics. Why can't anyone around the world manage money for other people and be on the cutting edge of these strategies? And that's what DeFi provides.
That's a great idea.
Yeah.
Because like if you have to use like banks in the process to launch your fund, like is that really permissionless or transparent or accessible for everyone? Not really. right? So I think that's actually pretty cool.
Yeah.
This idea that the wallet is the bank account, the EOA is the bank account is huge. I mean, that's just massive. I think Coinbase has really done an incredible job at promoting that.
Yeah. Their presentation was incredible on like the base app. I was blown away by it, and
you don't need a bank account.
And they're like,
think about that. I don't need a bank account.
It's self custody, so we don't have to deal with any of the like the banking stuff. It's just genius, right? I mean,
it's actually genius. It's a new way of thinking in terms of global asset movement, global financial services. And this is all international, right? This is targeting like the 7-8 billion people in the world. And I think that's why stablecoins it has become the ChatGPT moment. Like now you have all these like overinflated currencies in underdeveloped countries that people need and want access to the US dollar, and they're able to do that via stablecoins.
One other thing that I think is super interesting that you kind of touched on there when you were explaining, this sort of white glove service where I guess someone may create the LST, the lending, the whatever else for a new chain, is like at a higher level. Where do we move in the next couple of months in terms of this battle between L1 value capture and like apps value capture? And this has been a topic for a very long time that people have discussed, but I think that all of these L1s for good reason have just been like, you guys keep the economics. No better example of this than ETH L2, making it unbelievably cheap to just take effectively all the sequencer fees away from the L1.
Right.
And even on Solana, you see like a Jito capturing like so much of the staking yield, right?
Yeah.
Not flowing to the Solana token holders, right?
Stake is cheap.
Yeah. So I just wonder like how that evolves and if there's a moment where the L1s start to fight back.
Yeah, I think like you're already seeing this. Like I saw like a thread the other day. It's like it was contrarian to invest in infrastructure in like 2020, 2021, but now it's sort of become consensus that you don't want to invest in infrastructure anymore because we just have too much, or it feels like we have too much.
Yeah.
But on the consumer side, I think you saw with Pump Lunch, right? Like price is not doing that great right now, but like on like all fronts, like it's the biggest consumer app that crypto has ever seen.
Mm-hmm.
Right. And I think this is the moment where people like consumer founders are like, okay, like if I can launch an app like Pump, like why do I need to launch a chain? Like like let's be honest here, like most chains are not as valuable as Pump anymore.
Yeah.
Right.
Correct.
It's just like why? Like why do we
purely from a cash perspective?
Yeah.
Like, they're not valuable because of the money.
The revenue that they're making is
Yeah.
economically way more valuable to own Pump than the 50th L1.
Yeah.
So in terms of value capture, I think the power will shift more to the consumer apps themselves because they can kind of control the flow. Like people were thinking like Pump was going to launch their own L1 at one point, or like SVM L1 or like extension, right? So I think the power is going to go to the consumer apps and the apps that actually have traction.
Right.
Yeah.
Yeah, it's interesting. By the way, only in crypto could you have something launch for 4 billion, trade up to 7, and now it's trading back to like what 3 and change, and people are like, "Oh my gosh, this is the end of the world!" Like, this company sucks. It launched a year ago. It's only worth 3 billion.
By the way, they have 1.5 billion in cash.
Yeah.
Sorry, it's trading at 2x cash.
Yeah, it's crazy.
Not financial advice.
No, nothing is.
Kush, this was incredible. Thank you so much for joining. Last final remarks. 12 months from now, what do you think is going to be the biggest driver of total crypto market cap?
That's an interesting question. I think if we have more, like you said, like all these kind of inflection points with stable coins, more people coming on chain, I think you basically have kind of like the right catalyst. I will say I think I would love to see more kind of like consumer apps and things that actually onboard people into crypto. While I do think institutions provide a lot of value to kind of crypto, they're also kind of building their own stuff. So I think I would love to see more consumer apps, more people, and basically more uses of, like you said, like the underneath, like the invisible blockchain layer being used to power a lot of these applications. And bring more people on chain.
Yeah.
Bring more people on chain.
That's the goal. Thanks so much, Kush, investor at Maelstrom.
It was great. Thanks,
Awesome.
guys. Yeah.